All right, what is up, tycoons? What's up, traders? Super excited for today's video. I know you guys have been waiting for another natural gas video. So what I'm going to do is I'm going to cover some of the recent natural gas news so that you guys know what's going on surrounding the landscape of natural gas. And then I'm going to give you guys a very nice detailed technical analysis on the natural gas spot price, the natural gas futures, and we're also going to take a look at UNG and Boyle. All right. And the reason that I look at the futures and I look at the spot price is because that is really going to paint the picture much clearer than UNG and Boyle. All right. You need to pay attention to those if you're going to be trying to trade either UNG or Boyle or even cold. All right. So with that being said, smash the like button, subscribe to the channel so you guys don't miss any more. I'm going to be covering natural gas every single week, whether it's, 2 or 3 times a week. You can definitely count on some natural gas videos from this channel. We're going to jump straight into it. Natural gas futures prices bounce higher on cooler late April forecasts, as well as short covering. Now, that's something that you need to keep in mind. Shorts have been in massive profits for a very long time on natural gas. And anytime that there's a large bounce, there is the chance that short covering is also going to further accelerate that bounce. Now, does that mean that there's potential for a really big short squeeze? Yeah, there is. Okay. And you just have to keep in mind that anytime we see these really big rallies, a lot of times it could be fueled and accelerated by shorts covering, right? Because when they're closing their short positions, they're actually coming back to buying in. All right, now we're going to go into a brief summary real quick of today's price action by Leticia Gonzalez. All right, and so we see here that she says, that being said, down the road, we will more likely than not see a bit of a spike because the European Union still has to figure out what to do about winter. They do not have enough natural gas to get through the winter, so sooner or later, we're going to see quite a bit of pressure on the market. Now, that being said, it does not mean it's going to be very easy, and therefore I would anticipate a lot of volatility. Nonetheless, natural gas markets are probably easier to trade after a short-term rally that showed signs of exhaustion. At this point, I think it is still going to be a market that you need to be very cautious with, but at the end of the day, demand for natural gas is going to be very weak for the next few months. Now, this is something to keep in mind. The demand probably is going to be very weak for the next few months, but what they're doing is they're painting the picture for the next narrative, right? And they're talking about the European Union, winter, all right, and how they're not going to have enough natural gas to get through winter. So, that's kind of, really where I'm focusing on is kind of the longer term, right? Not so much on the short term. Now, with that being said, the content provided on this YouTube channel is for informational and educational purposes only. It's not intended to be relied upon as legal, financial, or investment advice. Myself and any other individuals, we're not registered financial advisors or brokers and do not make recommendations, okay? Trading in stocks, bonds, commodities, cryptos, all of those things, it involves a significant risk of loss and is not suitable for all investors. So make sure to read through the full disclaimer before moving forward. One thing I do want to highlight, and my last natural gas video was on this, is the April seasonality. All right. And I went through the history, guys, for you, and 69% of the time it's positive and 30% of the time it's negative. So there is that chance that we have about a 70% chance that the month of April is actually going to be positive for the price of natural gas. Now, keep in mind, this isn't going into how much it's going to go up. So nat gas may have been up 1% that month. There's other times it was up 15, 20%. Okay. So, just keep that in mind. It doesn't mean that we have to have a huge rally just because April seasonality has a 69% chance of, being positive historically. So, I don't want to mislead people or tell people that, hey, we're about to have some type of crazy month and to, throw all your money into Boyle or into UNG on long positions, right? Just want to give you guys some perspective. Now, continuing on the international news, okay, we can see here that Europe is facing costly winter without enough long-term LNG deals. They have not made enough progress in locking in long-term contracts for LNG as an alternative to Russian pipeline supply, which may prove costly next winter as a rebound in Chinese demand could sharply tighten the market. You guys have to remember, China is fully reopened now, okay? They're done with the zero COVID policy, and demand in China most likely is going to increase for natural gas, LNG, And so buying LNG to replace the curtailed Russian flows, it helped the bloc weather the first winter of the Ukraine conflict, with Europe importing 121 million tons of the fuel in 2022, which was a 60% increase from 2021. And I've been covering LNG, and I've also made an entire video dedicated to the top LNG stocks. The US has become a powerhouse when it comes to exporting LNG, liquefied natural gas. And that's something really, really interesting. But since the Green Lobby in Europe has managed to persuade politicians wrongly that hydrogen to a large extent can replace natural gas as an energy carrier by 2030, Europe has become far too reliant on spot and short-term purchases of LNG. This makes it tough for them to commit to the medium and longer-term deals, and that potentially leaves them exposed to the spot market in the future. Right now, in more international news, we have G7 climate ministers consider endorsing new gas investments. Right, the climate ministers of the group of 7 countries may make the case for new investments in natural gas supply. Climate change and energy ministers from G7 countries will meet on April 15th and April 16th in Sapporo, Japan. So, mark that date on your calendar. We could see a little bit of volatility in the market around those dates if this proves to be some type of, big catalyst, right? So this is just one thing to pay attention to. Now, a draft of the G7 statement said ministers would agree that new upstream investments in gas were needed because of the energy fallout from Russia's invasion. Russia slashed gas deliveries to Europe last year, causing a global supply squeeze and soaring prices in global markets. And they recognize the need for necessary upstream investments in LNG and natural gas. Okay, so both liquefied natural gas and the regular natural gas. All right. Once major buyers of Russian pipeline gas, European countries are racing to diversify their energy sources, replacing Russian gas in part with more LNG. Right. And this is a common narrative that you've seen. Now, to be fully transparent with you guys, like I am invested in this stuff. Okay. Just because I'm invested in something or purchasing something doesn't mean that you should. But, I hedged myself, which is something that I definitely recommend. You have to have some type of risk management and some type of protection. Okay. And so what I have is I have the UNG shares. And you can see my position now is currently down about 2.46. So I am down on those, but I have Boyle put options, which is downside protection. Those are still green right now, but you can see here, actually, I just closed half 40% on April 6th, which also was my birthday. So if you want to wish me a late happy birthday in the comments, feel free to do so. And then I also bought UNG shares on April 6th as well. So, I'm closing the short position. I closed half of that, took profits, okay, and then I averaged down, right? And you can see I've been investing into natural gas through UNG since February 7th of 2023. So if you guys want to join the Discord, okay, and join the trading community, the link is in the description. All right, and we're actually running a coupon code ZachlyTrades for 50% off, guys. Just for the month of April, you can get 50% off your first month. The coupon code is ZACHLY. And then the number 2, it's all lowercase, and use the link in the description to join the Discord, and that will get you guys 50% off your first month. Okay, now enough about the Discord. What we're going to do is we're going to go into some more international news. And we see here that Gazprom is actually going to be shipping 37.1 million cubic meters of gas to Europe via Ukraine on Friday. And so they talked a lot about Russia cutting off Europe and things like that. But we can see that they are now back in business, and Russia's Gazprom is shipping 37 million cubic meters of gas to Europe via Ukraine on Friday. All right, so that's really interesting to see. Now, April and May, they are shoulder season months, and they usually see very low weather-related demand, with the supply the highest that it has ever been for this time of year, and storage ending the withdrawal season at near high end of the 5-year range. We see the market being very oversupplied at this time, said John Avon. He's an analyst with data provider Refinitiv. I really don't see much upside for prices right now. I would be bearish in the near term until we see production start to come down significantly. Refinitiv said average gas output in the U.S. lower 48 states has risen to 99.9 billion cubic feet per day so far in April, up from 98.7 billion cubic feet per day in March. That compares with a monthly record of 100.4 billion cubic feet in January of 2023. Okay. Now, if we continue on, all right, we can see here that Asia as well has continued to pull ahead in the race for global LNG supply this year before new flows come into the market in 2025 and beyond. Their preference for security of supply has allowed them to continue to support new projects, whereas European buyers are concerned about committing to supply well into the start of their net zero targets. While gas is a fossil fuel, it produces less carbon dioxide emissions than coal, so some EU states see it as a temporary alternative to replace dirtier fuels. Eurasia Group's managing director for energy, climate, and sustainability said Europe will not be able to lock in LNG as a replacement for Russian gas as long as the EU views it as a transition fuel, as producers want a guaranteed market in Europe over the next few decades, but they are expected to rise again with a hot summer that could cut hydro levels, a cold 2023 to 2024 winter, and a rebound in Chinese LNG demand, all seen as among the risk factors for price. Major LNG producers and traders include Qatar Energy, Shell, Chevron, and ConocoPhillips have in recent months all held tasks in European capitals on securing LNG deals. If you take gas with a delivery point Germany, you cannot go beyond 2043 because gas is not allowed in Germany after 2043, which is something really, really interesting there. So to resolve the issue, Qatar has offered Germany short-term contracts of 15 years, which would price the LNG at a hefty premium to the longer-term contract. All right. And so if we go on here a little bit more, we can speak about the U.S. oil and gas rig count. Now, this fell for the second week in a row. All right. U.S. energy firms this week cut the number of oil and natural gas rigs operating for a second week in a row. And this is important because, the price of natural gas is going to be, also affected by supply and, production and things like that. We recently saw OPEC cutting oil production, and we've seen a boost in, oil futures. Okay, we have the EPA's stringent coal-fired emission rules. Now, could it favor natural gas? That's kind of what this chart right here and this article, which I'm just going to read you guys some of the main points of there. But you can see that U.S. electricity generation by energy source, natural gas is the biggest right here, guys. Okay, this is what it's been historically, and then these two right here are the forecast. And we can see natural gas takes up the largest amount. It's larger than coal. And we see in the forecast here that coal is going to be cut. All right. And they're expecting nuclear to rise a little bit, but mostly they're expecting to see a boost in wind and solar. All right. Now, last year, President Biden, old Sleepy Joe, said coal plants were becoming too expensive to run and could be shut down in favor of renewable energy projects. The regulation would be the first of its kind in more than a decade. The more stringent news for coal-fired plants also comes at a time when natural gas is already fast displacing coal in the power stack. So, kind of just more of a possible bullish natural gas narrative here, as far as the natural coal and really just them trying to cut down on coal and reduce coal in the US. Now, I just did something new in my natural gas videos. I have the ChatGPT, the GPT 4.0. And so I just, I love playing around with ChatGPT, and I actually asked it a couple questions about natural gas to see what secret answers does does AI have about natural gas for us? And, shocker, none of the answers were too amazing. Okay. But it is pretty interesting, right? So the first thing that we looked at here is said, what can impact the price of natural gas to go up? And what specifically could be considered the biggest factor of the results given? So number one is going to be weather, and weather is often considered the most significant factor affecting natural gas prices, especially in the short term. And so a lot of times you saw these warm winter narratives. Now we're leaving winter, okay, and we're approaching we're actually in spring right now and getting going through spring, but through a lot of winter we saw warm winter narratives as a reason that the price of natural gas was dropping. Number two is going to be supply and demand. So the balance between natural gas supply and demand can heavily influence prices. Number three is going to be storage levels. So the amount of natural gas in storage can impact prices. If storage levels are low, it can lead to concerns about meeting demand during peak periods, causing prices to rise. Number four is geopolitical events. Now, we saw that with the Russia-Ukraine crisis. Number 5 is going to be infrastructure and transportation, whether that's pipeline constraints, capacity limitations, and transportation issues. Number 6 is market sentiment. So investor sentiment and expectations about future supply, demand, and other factors can impact natural gas prices. For example, if market participants expect a cold winter, prices may rise in anticipation of increased demand. Now, what did the first article that we read over go and say essentially was that they are expecting a cold winter and expecting Europe to be facing challenges because they don't have enough LNG. Number 7 is going to be government policies and regulations, such as environmental regulations or taxes. We kind of just went over that as well with some of the coal and, governmental environmental thing. Also, you have the G7 members meeting. Number 8 is going to be currency exchange rates, as natural gas is often traded in US dollars. Fluctuations in value of the dollar can impact natural gas prices. And guess what the dollar has been doing, guys? It's been puking. It's been taking a massive dump. There's a lot of de-dollarization talk going on right now. And, that's a really big topic over the last month or two. It has been the de-dollarization. I actually made a video about that here recently. Okay. And so I wanted to ask it about oil production being cut by OPEC, right? And so we essentially have the same question here asked twice. Does OPEC cutting oil production affect the price of natural gas? And ChatGPT responded with, yes, OPEC cutting oil production can indirectly affect the price of natural gas. There are a few ways in OPEC's actions, such as cutting oil production, can affect natural gas. And, you have energy substitution, you have economic factors, you have co-production, market sentiment, and associated gas production. I won't go too heavily into those. If you want to read them further, you can pause the video and, just read through some of the answers. Again, nothing too amazing, but if you're pretty brand new to this stuff and you don't really know, that these are some of the things that affect it, the price of natural gas, then this is some pretty good info to start off with, right? Now, we're finally heading into the TA right now. So if you've made it this far, why haven't you subscribed yet? Why haven't you smashed the like button? Make sure to do that. I do want to say, if you enjoy this TA session, I offer one-on-one sessions via Zoom, right? And so you can do a coaching session. I can go over some lessons, whether it's technical analysis. I can give you guys some out-the-box perspectives on, what to do with your boil position or your UNG. Actually, a large majority of my coaching sessions now are pretty much strictly related to boil. And we have people who are down tens of thousands of dollars. There's people down hundreds of thousands of dollars that have contacted me, and there's people that are down millions and millions and millions of dollars. There's a reason that they call natural gas the widowmaker. And, I just want you to know that you guys aren't alone in your pain. There are other people, going through much worse situations than you are. So keep your head up and, hopefully you can learn from your mistakes and realize what you did wrong. Maybe you didn't have a stop loss, in place. Maybe you didn't have any downside protection as a short protect, some type of a short or some type of a hedge. Right. Or maybe, you originally entered into as a short-term trade and then prices just kept falling. And so you thought that it was a better opportunity to buy the dip and you didn't really follow your trade plan. You kind of just threw the trade plan out the window and kept buying as things went lower and lower and it started catching a falling knife. So enough about that. Remember, you can email me at ZachlyTrades@gmail.com if you guys are interested in a one-on-one Zoom session. But we're going to go over the natural gas spot price. And remember, in the beginning of the video, I said you guys need to be paying attention to the spot price as well as the futures. So the next chart we're going to go over is the futures, but I want to explain some simple strategies that I use and, show you guys how they've affected the price in the past and how they can possibly become really good indicators of future activity. So the first one is going to be the MACD. All right. And then the second one is going to be the RSI. And what I like to do is I like to look for divergences. So this means that price is doing something different than the indicators. So in this case, we have the price making a high right here and then a higher high. So we're making higher highs on the price, clearly in an uptrend. But when you look at your RSI, remember, this is the relative strength index. It's going to measure the relative strength of whatever you're looking at. And we can see we actually have a high and then a lower high at the same exact points where we had a high and then a higher high. So that right there is known as a bearish divergence, when the price makes higher highs and the RSI makes lower highs, and it's an indicator you could see some type of bearish activity. Now, shortly after there, what do we end up getting right here? We get a MACD sell signal. So the red line is the one you want to pay attention to, and when it crosses below, that's known as an exit signal. And so what do we get? We get two signals here. We have a MACD exit signal, and we have RSI bearish divergence. And what do you see? You see a very strong move to the downside over the next 3 months, right? This is September over here, and you can see in December we go much lower. Now, the opposite of that is going to be bullish divergence, where you're creating a low and then a lower low, and then you have a low and a higher low here on the RSI. So in this case, we're making higher lows, building in relative strength as the price is going lower in a downtrend, making lower lows. And what do we see from the end of December up until February? We see a very nice spike in the price. Now, what happens as well, we end up seeing the MACD crossover to the upside. Right. So again, we get two signals here showing that we could potentially get bullish activity. Now, does that mean that it's going to play out immediately, guys, that we're going to get, in the next week, some huge significant move? No, if you take a look, it usually takes months for these, divergences to play out and for you to see the true effect. Over here, we get a bearish divergence, higher highs. RSI is making lower highs on a consistent basis. And then we end up seeing the MACD sell signal right here, and it curls down below. And we get a very strong move to the downside from June to July. Then we build a bullish divergence with lower lows, higher lows on the RSI. Red line crosses above the blue line, strong push up. And these divergences continue to play out. Now, most recently, what we had was a large bearish divergence here, where we had these higher highs followed by lower highs. And that was one of the driving factors. Now, technical analysis is not only going to be the one single thing that's going to drive price, right? But it is something that helps accelerate some of the moves due to a self-fulfilling prophecy. And if you combine fundamental news as well as geopolitical news and things like that with it, then you can really have a better understanding of price action and why some things are moving the way they are. Now, recently, the reason that we're still paying attention to this one is because we didn't really break out past our bearish divergence trend line that initially pushed us to the downside, which is something that we wanted to do, right? We actually came up above and we tried to bounce, but ultimately we got a look above and fail. Now, this is significant. A look above and fail is significant because at this point in time, when we broke out past that trend line, bulls are fully presented the opportunity. And look at where that was right here. So here, bulls were really presented the full opportunity to really drive the price of natural gas back up to $3 and potentially up to about the $3.30 price range. But rather, they failed and closed back in between that trend line. And I pointed out in my videos that that's a bearish indicator, right? Because what it shows is it shows sellers are actually in control because bulls had the full opportunity, did not take advantage of that opportunity. And, so that's just, visualizes that sellers are in control. Now, we do have bullish divergence. And I mentioned look for a potential bounce off of that bullish divergence if we do come back down into the range on a look above and fail. And that's exactly what we did, right? So we bounced here, here, and we got pretty much a bounce right there as well. So we've continued to make these higher lows as the price of natural gas has continued to go lower, obviously. And we're actually back above that trend line now. So can we actually get a strong push to the upside? That's what we're going to see. That's what we're going to look at. Spot price is back above that $2 price range. Now, the major resistance on spot for me personally, these are my levels, is going to be 2.2, 2.43, 2.79, and 3.32. So if you want to chart those levels on your chart and practice charting up the MACD and the RSI, feel free to do so. Okay, the next thing we're looking at here is the natural gas futures. This is the monthly chart, and the reason I'm showing you guys the monthly chart is to give you guys a little bit of some macro perspective. Look at how we've tested this demand zone now 3 times, and each time we test it, strong pushes back up out of this demand zone. This is important, guys. This is showing that this is still a relevant demand zone for the time being. Right now, if you're not familiar, and demand zone, supply zone sound a little too complicated, think of them as support and resistance, but think of them as a much better form of support and resistance. What a demand zone is simply an area where there's an imbalance of buy orders and price gets pushed up higher, right? because ultimately, these candlesticks, they represent live auction market trades. And so you're seeing buyers and sellers fighting for position and prices at these levels. And when there's an imbalance of buyers, price pushes higher. When there's an imbalance of sellers, price pushes lower. And I like to call these areas in between no man's land, because you don't want to look to take positions in areas of no man's land, as your risk to reward ratio is not skewed in your favor, because you're not really sure if price is going to go up into supply here or dip back down into demand here. But when you have proven areas of demand, proven areas of supply, then you're increasing your odds of success by entering off of those zones. All right. And so, these are the major supply zones and demand zones that I'm looking at on a monthly chart. And you can see we really haven't tested these levels in a very, very long time up until here recently. So, price skyrocketed, as you can see, and naturally it's gravitated back towards an area of demand. Now, we could head lower in this demand zone. That's entirely possible. And if there's no demand and there's not enough buyers present, it is entirely possible we can continue to head lower. All right. Now, if we zoom in a little bit, this is the natural gas 4-hour chart. And so, we've been tracking this, right? I showed you guys the rising wedge. These blue boxes right here, these are known as gaps. Gaps tend to fill about 90% of the time historically. And if you take a look, I was kind of trying to warn people, hey, we're up in the supply zone. We have a rising wedge right here. We saw a breakdown retest. All right, very textbook. We broke out of the trend line, retested the trend line, and then pushed lower, filled the gap. And I mentioned that in a perfect world scenario, a rising wedge is going to take you back down to where the pattern began, which is right at the tip of our demand zone. And you can see we came over here to the tip of our demand zone and we started bouncing and we're moving sideways a little bit. All right, I also mentioned this gap down in a recent video as well. Once this gap formed, I said, hey, be cautious. We could see another move down to fill this gap. All right. Now, one thing to mention is we do have a slight bullish divergence here on the MACD, and we did have a slight bullish divergence with a low here and a lower low here. So price is in a downtrend, but the RSI made a low, and then it actually made an equal low here as well. So, we have, price action diverging from the RSI, and we did get a slight bounce. All right. But then ultimately we came back and filled that gap to the downside. And today we had a very strong push up. Really nice to see. What we're going to look for is we're going to see if that can reflect in UNG as well as Boyle. All right. Now, UNG, when it comes to the major levels that I'm watching on UNG, overhead resistance right now is 715. All right. We do have this level here, 753, which was my Elliott wave ABC target to the downside. And, so 753, 715 are going to be some major levels. If we make a retracement, all right, from this massive move to the downside, as you can see, we really haven't retraced at all. We've been trading in this bearish channel right now. There's been lots of algorithmic selling just happening in this trading range right now. And it's important to spot these channels and, essentially, these areas and this price action, these algorithmic patterns, right? You can see we did actually break out of this channel here today. It is an indecision candlestick, so there is a possibility we could pull back to the downside. We would have preferred to see a little bit more strength on the close of the body of this candle. But, you have to take what you have to get. Remember, 715 is that big resistance level. If we do get some retracement, right, 771, 859, those are the major retracement levels I'm paying attention to. 822 is a really big resistance level now, all right, that I've been watching. You can see over here in the past, 822 was a strong support level, but ultimately we did break below there and head lower. Now, we do have bullish divergence forming here as well, right? And we've had it. We have had the low. We've had the lower low. We've had a lower low here. All right, but you see we actually broke below this trend line and we're currently just inching above it, right? So it's going to be really interesting. Is this a breakdown and retest and push lower, right? That's going to be bearish. And at that point, we would be looking at 667, 642, and 606 are the major support levels that I have on UNG to the downside if we reject the top of this trend line now. But if we continue to push up higher and flip it back to support, we could get a look below and fail, guys. So remember, I talked about a look above and fail earlier, where it showed that, essentially bulls had the full opportunity to really break out, but they didn't break out. And so it showed that bears were in control. If, we have a look below and fail here, it could signify that bears really are losing control because they had the full opportunity on the break and retest of this trend line to really push things lower. And if they don't do that and we continue to push higher, it could show that bulls are actually starting to try and take control here and push things up higher. So pay attention to all of the key levels. Okay, those are my levels on UNG, and here we have Boyle as well has a bullish divergence on the RSI, right? So we have a low here, we have a low here, we have lower lows, okay, and we have low, higher low, higher low, higher low. So Boyle is doing a little bit of a better job of staying above its bullish divergence trend line. We have some question marks here on the MACD. As you can see, the red and the blue line are squeezing together very much. If we see this thing push to the downside, right, be mindful that that could be an exit signal and we could be due for another big push to the downside. For me, the major levels of support I'm watching on Boyle are $3.20, $2.83, as well as $2.13. So those are the main levels that I'm looking at on Boyle to the downside. To the upside, 435 is a really major resistance level for me, as well as 516. And if we can get a 50% or 61.8% retracement, that could take us up to 546 as well as 606. Now, keep in mind, and I've mentioned this for the past couple months, typically things that are making 52-week lows and new all-time lows continue to make new all-time lows or new 52-week lows before eventually bottoming, right? So, Boyle is trying to find a bottom, but it's in uncharted territory. So ultimately, it's going to be up for buyers in supply and demand to figure out where the bottom is. All right. Over in these time periods, a lot of people thought there was a bottom. We saw a very nice strong rally and a very nice push. All right. But ultimately, what did we do? We came down and we made new bottoms. So just be mindful of that, okay? That, we don't know where the bottom is. There's no historical, areas where natural Boyle has bottomed, all right? It's making all-time lows. So it's going to be very hard to predict where the, line in the sand, where the big support level is going to be that buyers potentially could be stepping in. Now, we've seen that it's been a psychological level is right around that $3 level. It's been holding right around that $3 level pretty quickly, here recently. And as soon as it dipped below that area, we saw a very strong push up, and Boyle was up about 14.19% today. So, that's what I'm looking at in all of the natural gas charts. Remember, guys, if you want to join the Discord, the link to the Discord is in the description below. All right, these are some of the profits from today's trades, guys, in the Discord. So this is like live, like we're trading pretty much every single day. We had some members, with a 46% trade, 36% trade, 17.5% on the whole account for the day. We had one of our members actually in here got 436% profits on today on a single day trade, as well as Tesla. We went up about 56% on call options on Tesla. So, what we did actually was we swung a lot of put positions, and, we swung those put positions over the weekend. The S&P 500 in the stock market was down at open this morning. We closed a lot of those put positions and actually got in some bullish positions as well. And we're able to capitalize off of that. So code Zachly, ZACHLY, and the number 2, all lowercase letters, will get you guys 50% off your first month in the Discord. All right, the link is in the description below. If you guys are interested in a one-on-one session with me and you guys want to do a Zoom meeting, you can email me at ZachlyTrades@gmail.com. and I'll get back to you as soon as I can, and we can try and work on setting up a time that works for the both of us, as soon as possible. Okay, so appreciate you guys watching. Smash the like button, subscribe to the channel if you guys are new, and I'm out.